Hey guys, welcome back to another episode of Sky's the Limit Podcast. I'm your host, Mike Doherty, and today we have Jon Weiskopf. He's the founder and CEO of Blue Eyed Capital, which is a purpose-driven investment firm helping a lot of people co-invest in high-performing real estate. Before that, doing his thing there, he did lead the design and execution of more than 10 billion with a B in commercial real estate across 20 different countries. Tons of experience from Apple's most iconic flagship stores to skyscrapers. He's doing a lot of cool stuff, some private credit stuff, earnest money lending, and some gap lending we're going to get into. So, Jon, welcome. Thank you for being on the podcast.
Mike, thank you, man. I'm appreciated. Happy to be here.
So why don't we get into your background real quick? What did you do before you got started in real estate investing?
Yeah, I'm a mechanical engineer, professional licensed engineer, and I spent about 20 years designing air conditioning, power, life safety systems, or building systems. 10 years in New York City. It's kind of where my career started. And one day I got a call from Apple if I was interested in interviewing for them, and I think it was 6 months and a torturous canceling of interviews and finally getting out there and then painstakingly waiting for an offer or not one. And then moved to California, and I spent another nine and a half years with them, where I was in charge of engineering for all of their retail store portfolio around the world. And then jumped ship and told my wife I was sick of working for them. And I was going to throw some stock options out the window and start over. Kind of got that, what the heck are you talking about? Why are you doing this to me? But sure, go do it. And that's what, now I'm where I'm at.
Nice. And so can you tell the listeners kind of exactly what you do today?
Sure. Started off, I think like a lot of people early on in real estate, I'm a syndicator. So multifamily, but mainly focused on kind of the affordable housing sector. So Class C multifamily properties. I own a recently purchased, or a year ago, assisted living. That's a low income assisted living. That is much more of a business than it is real estate, though, I will tell you. And then recently, throughout my journey of trying to figure out how I was going to make money in real estate as an operator, in a high interest world, I got myself into private hard money lending. And that's been, it's probably been my biggest focus this past year, other than my assisted living. Only had one other acquisition this year in the multifamily world, just given kind of the environment and things like that. So keep myself busy.
Yep. Yeah, definitely busy. If you wouldn't mind explaining, and selfishly, I want to learn more. We were talking about this before we went live, but so you're doing, involved in private credit, earnest money lending, and then gap lending. So very familiar with gap lending, but earnest money lending, that was the first time I've heard anyone doing that. So if you wouldn't mind explaining to the listeners, what is earnest money lending? Why is it important? Why is there a need for it?
Sure. So if any of you have ever put money down on a property, whether it's personal or interest into a property, whether it's personal, whether it's commercial, most of those offers come with hey, I'm going to give you X percentage of the purchase price so that you know that I'm actually interested, and I'm willing to put money down to show you that I'm interested. Commercial world, that's usually around 1%, but no fixed rule when it comes to that. That money is used to cover your due diligence period. So that 30, 45, maybe 60 days where you have to do your due diligence on your purchase while you're negotiating your PSA agreement. After which that money typically will go hard, meaning it becomes non-refundable. A lot of folks put contracts in where you are actually then putting another chunk of money down between on that go hard date until getting to close, so that you can show that buyer, I'm interested, I'm committed, I'm so interested that I'm willing to actually lose money if I can't close. And so, early on in my career in real estate investing, I found a need where there's newer up and coming operators that don't always have $100,000 to put down on a property, but they have a great deal. There's a lot of folks out there that maybe just closed on a deal, haven't received their acquisition fee, so haven't refilled their bank accounts, right? Not everybody has millions of dollars sitting in there ready to buy the next property. And a lot of people, that are getting money from retail investors need that deal to present to them before they can raise money again. And so I did kind of stumbled upon this, Mike. I'll tell you, like, it wasn't something that I went looking for. It was a way for me to meet very interesting people. I've made, I'm very specific on who I lend to. It is a risky endeavor, especially if you are putting your money to go hard. You have to really understand a few key items here. So one is, can the borrower, which is the operator, can they fulfill the terms of the contract to get that deal across the line? So do they have lenders in place that are actually going to close? Do they have the means to go make sure that they can go raise capital from a deep enough investor network, right? That everybody's always scraping for capital, especially when you're not a big, behemoth like a BlackRock or somebody like that, or Rise 48 or something, right? And then, is their business plan marketable? So it's interesting, you go look at it from an investment perspective. What is this deal going to look like in over the 5 years that somebody's running it? I don't really worry a lot about that. It has to make sense. It has to be feasible. The individual that's borrowing money from me has to have shown that they've done it before, because then they can show, I have investors that have trusted in me. I've proven it. I can go do it, and I'm going to get money in.
So
So it's this
when do you
weird little
ever
niche.
recoup your money?
So I recoup
Yeah,
my money
when do
right
you
at
ever make?
closing.
So they eventually do come up with their own earnest money deposit. They just need a little bit more time from the time they put this property in a contract because they didn't want to lose it to the time they're actually ready to close. So that's why you're saying it's it's the utmost important that they actually have the ability to close, so that you can recoup your funds,
Yeah, and they have to be able to raise
essentially.
capital, because most
Huh.
folks are going out to and using their retail investors. But again, maybe it's them. A lot of folks that I loan to end up paying part of the earnest money back with their own money, right? But as well
Hmm.
as investor cash that they've raised.
Yeah, I'm sure it's very deal by deal dependent. I mean, you probably have those, operators that are, find a gold mine of a deal. They need their earnest money because the other deal that they would normally have closed by now, they could fund that earnest money hasn't closed yet. So, if they can show you a mortgage commitment from the other deal, hey, listen, we're about to close this deal. We just need you to do like a month or two for the earnest, get us through, earnest, the due diligence period, and we'll pay you right back from when this deal closes. I have the mortgage commitment here. Like, okay, that is somewhat of a lower risk. But if it's like a newer operator and they don't have a good track record, you're putting up the earnest money deposit for a
Yeah, I
deal
know.
that may not sense it. Yeah. Okay. All right.
Yeah,
I
no.
see.
So this
Wow.
is. I have very specific rules to protect my capital. For the past 2.5 years, I've done about 2.9 million in loans. All of it has been through my own personal capital. I recently launched a debt fund to kind of bring this out to investors and friends who asked me to, hey, I want to get a cut of what you're doing. Um, in order to get an earnest money loan from me, you have to either have to know you already. You have to be referred to me by somebody in my network, and preferably you have somebody within my network that is part of your GPT. So I'll give you an example. I had a new borrower that just came to me back in, I think it was August, for a multifamily property. It was a $75,000 loan, and they were referred to me through in-network person. One of their GP partners was somebody that I own. I am a GP with on two other deals, and he's also one of strong capital raiser. So I was, again, very consistent with where I know the deal can go, who's raising capital, how that money's coming in. They performed. They actually paid off the loan early because they had to extend the purchase, the closing, and they didn't want to pay my default rates or my extension fees. But that was a two
Wow.
and a
And
half.
so
That was a
typically,
2.5 month loan.
yeah. So that's my next question. How long do you typically see these earnest money loans for? How, like, time period
Usually,
wise?
yeah, usually 60 to 90 days. A lot of times I give people, 90. days. I have some that ask for 120. I think closing has gotten easier in the marketplace this year compared to 2024. I would say in 2024, my average earnest money loan was probably about 4.5, maybe even 5 months.
Mm, yeah. Yeah, no, that makes sense. It's really however long it takes for that operator to close the deal. Not that's when you get your money back.
It
But
does.
let's say that,
Yeah.
I mean, in like, obviously every deal is different, but if they say, okay, I know it's going to take me 90 days to close this deal, but the other deal I was hoping to have their earnest money for just closed, so now I have it, and you're a month in, they'll likely just pay you back in that month rather than carrying on and paying all the interest, right?
Yeah,
Yeah.
depending on what the terms are. I have some prepayment penalties. I
Yeah.
have some
Right.
minimum costs that I need to,
Yeah.
I need to get in order to put my money out there and go through the process. So, but typical for most loans, right? But yeah, I mean,
Yeah.
I have extension fees. I always give people extension options, but a lot of people don't want to pay that extra money, so they will pay back,
Right.
when they
Right.
can, and it's in their best interest. Um,
Yeah. Have you ever had any deals go south?
I have never lost money.
Knock on wood, right? Well, I'll knock on
No,
wood right
yeah,
now.
yeah, yeah. This,
Wow, that's
and look,
cool.
it's great to say that I haven't. That doesn't mean that my record will be perfect
Right.
forever. Um, I try to offer. I am not a high volume lender, right? My loans are $500,000 or less. My max timeline is 6 months or under, right? I don't do long term loans. I do short, do small money. Some of that is just because it's my own capital. It's what I have available. But it's also the amount of
Yep.
money that I want to put at risk at any given time, right? And to keep my business kind of moving and things like that. But I create a more personal experience when it comes to this. I have update calls with the borrower every single week. I track what they're doing. Sometimes I'm involved in their deals. There's a bunch of these deals I'm a GP on and I'm raising capital for as well. So there's a net interest in me to not only support raising capital and get the deal to the closing, because that covers some of
Yeah.
my butt as well too. So, but I try to offer a more personalized service, and so it allows me to customize loans to meet people's needs, and get terms that work for win-win for both parties.
Yeah. Wow. Wow, that's really good. So, in addition to the gap funding and earnest money lending that you're doing, what are you doing in the multifamily realm of? Are you syndicating multifamily deals? Are you the GP? Are you just investing as LP in these deals? What are you doing in that industry?
Sure, I got it all. I'm an LP. I'm a GP. I'm a small GP. I'm a big GP. I
Yep.
think it's a mix as I've kind of moved along. I have most of my assets are multifamily. Though I will tell you, I've turned a little sour on multifamily just personally a little bit. It's cash flow on those properties have been hard, at least the ones that I have. Maybe not for everybody. But about a year ago, a good partner of mine who happened to be a borrower, and that's how we met. And now we're good friends, and he's one of my biggest borrowers as well. But we decided to buy an assisted living facility down in Florida last year. So it's part multifamily, part business, probably more business than multifamily. Um, and it was a chance for us to kind of test the waters and see if we like the asset class. Probably one of the hardest things I've ever done. I had to manage or to work through
Yeah.
in my life. Dealing with the refinance of my own right now and seller finance payments coming up and staffing changes and all of that stuff. So, but it's been interesting.
Yeah,
That one is my
operational.
biggest GP share ownership. I'm about 60% owner of that entity.
Wow. And why assisted living? Just out of curiosity. I've never actually spoken to anyone that owns any assisted living facilities. So I'm curious how it's been. Like, a lot of people are Airbnb operators and I used to have an Airbnb too, and it's the hospitality business. It's not the multifamily investing business. Two completely different things. So I don't know much about assisted living, but it's operational, it's day to day. The needs are a lot different than tenants' needs per se.
Yep.
But then again, you're probably dealing with insurance companies, and it's just like logistically, it's got to be completely different. So, after all the headache, is the juice worth the squeeze? I don't know.
We are
What do
not
you
at
think?
our targets that we hoped that year one. We
Yep.
had to deal with some things that I never expected to deal with. One of those being your residents or tenants passing away. It seems silly to not think of that at the age. But why did we get into it? If you look at the world or the country, there's a big affordability issue. I have my parents are old and older and retired. Luckily for my mom, her house is paid off, right? So she doesn't have this issue. But there's a lot of folks that don't have that luxury, and it's a niche out there that I think is a very specific niche, but also one that is very high in demand. And so, the margins and the potential for the investment are significantly higher than a multifamily, right? We do deal with insurance, we do deal with Medicaid, we do deal with rents that are $3, 4, $5,000 a month compared to $1,500 a month or something like that. Now, it is very operational, but that's kind of what I've done for 20 years is kind of running things and setting up systems and kind of managing it. Um, the jury is still out if I'm ready for another one. um,
That's fair.
but it is a whole nother world. I mean, I have 45 employees. You have to worry about when a Medicaid payer, their check doesn't show up, right? All of a sudden I got $150,000 of income for the month that did not show up the day before payroll is due. Oh boy. Um,
Yeah.
so
Right.
I think
Right.
for me at least, it's been, and I say this to anybody, no matter what asset your class you're investing in, because I think it hits at all different kind of scales and sizes. Is you have to be prepared. And people say, "Yeah, have reserves and have this, and I can dip in my toes into this." And um, I've in a couple GP arrangements that I'm not really happy with because everybody thinks that we can just dip into reserves whenever you want and that we should use them. And that as the deal goes on and gets older, that you can diminish your reserves. And, when you have people's salaries that make hourly wages and live paycheck to paycheck, you have a very different perspective on the importance of making sure that you are 10 steps ahead of everything.
Mhm.
And so
Yeah.
it makes you more keen to the things that you have to pay attention to. I've made tons of mistakes on this, learned a ton. Like there's a lot that I will never do again. There's a lot that I will make sure that I do every single time I ever do it, no matter what asset I
Right.
buy.
Oh,
Right. And you don't, I have a 5.5-year-old son and he always asks me how work is going. And I told him today, I was like, dad made a mistake and I'm paying for it right now. And he goes, but you're going to learn from it. And I said, well, sometimes the only way to learn is to cry a little,
yep.
you, you
Yep.
know?
Yep. No, I hear you.
So look, I think even senior living, maybe assisted living is kind of that next step. There's a lot of medical stuff like that that makes it that much harder. But I would recommend people look at senior living. There's a lot of retirees coming, a lot of people hoping to downsize. It is a niche that is not just in high demand today, but I think only going to grow over the next 5 to 10 years.
Yeah. Yeah. No, absolutely. So what's next for Blue Eyed Capital? You guys are doing the private credit stuff, the earnest money lending, gap lending. You're dipping your toes into assisted living. Where do you see your firm going next?
We are getting ready to dip our toes into the BTR development space,
The what? The V
built to rent.
built oh BTR built to
Yeah,
rent.
built to
Okay.
rent. So built to
Yeah.
rent living. So I live up in Wisconsin. A lot of people like their space up here, but we are looking at building our own built to rent senior living community. Being an engineer, I'm big into um, how do you build things faster, more efficiently. So we're big into modular construction. So we've been looking at building all of our homes in a factory and trying to do something a little bit different than the stick build norms out there today.
So what is built to rent? Like, how
So
is that different than building a multifamily and renting it out?
yeah, so it's really single family homes. So we're building a single family home
Got it.
community, and then renting homes out. You look at the affordability crisis, how people don't have 20% to put down on a three, $400,000 home. It's an opportunity for people to get home living without the down payment burden that comes with trying to buy a home.
Got it. Okay. So I'm thinking like 55 plus community, like gated, but instead of buying those, they can rent them.
Correct. Yep.
Got it. I
100%.
don't know
Spot
if
on,
we
man.
I mean, I'm trying to think if we have any of those around here. Are those common or are they more like where are you doing that?
I'm looking to do it in Wisconsin, just keeping it close to home. The being far away is hard to run things efficiently, but it is definitely a growing market. I think it's more, it's not specific to senior living. It just I
Hmm.
live in a part of the state where the average age is 57.
Wow. Wow.
Right.
Well, you're doing
So
awesome, amazing stuff
yeah,
for the
man. So
community.
just
Yeah.
I don't know, trying a few things to find exactly what kind of works.
So obviously you'll build these at whatever, price per square foot you can build them at, and then you'll rent them out. And then most people listening are probably like, okay, how does he recoup his money if he's not selling them, right? So correct me if I'm wrong, but you'll likely go, you get some sort of private hard money loan or maybe fund it yourself. And then the way you pay yourself back is you'll go to a new bank or financial institution and say, hey, I have all 20 of these homes. They're all rented out. Look at the rents I'm getting. Can you please give me a new loan? And you'll do what we call a cash out refinance or maybe a rate and term refinance. And you'll, probably get 75, 70, maybe 65 to 70% loan to value on something like that. And you'll pay back yourself 60 to 70% of that
Yep.
capital.
Yep. And there
Yeah.
will be outside
Yep.
investors in there.
Yep.
Obviously with return structure and things like that. It's I look at it at two ways. One, it's serving a market that needs it. Um, it is also a chance if you can build at scale and for cheaper than the market can build. An individual can build a home for. This is a 10-year project. So I rent for 10 years. In 10 years, I either sell off 50 different homes with 10 years of appreciation on them, or I sell the business. I sell that rental
Hmm.
community. You can convert them, convert. I'm even exploring, with some of my partners, ways where it could be part owned, part rented community, right? So in order
Very
to
cool.
recoup some capital, not be carrying so much debt that percentage of the homes are actually sold off. Um, and people paying an HOA fee, so there's consistent property management and things like that,
Yeah.
from a development. But
Yeah.
there's
That's great.
there's endless possibilities when it comes to real estate.
I know that's why we do it. We love it.
Yeah,
It's just you can dip your toes in so many different things: multifamily, self storage, industrial, assisted living, BTRs. Never even heard of those. So, I mean, there's like it's why I do this podcast. It's just like forever. If you're not learning and growing, you'll stay complacent and you'll never get. I mean, maybe everyone's goals are a little bit different, but I think you always have to stay learning. So,
have to.
congratulations. That's awesome.
Thank you.
So, tell me a little bit about your family. So you say you live in Wisconsin. I always ask a lot of our guests, like, what does your day to day look like from the time you wake up to the time you go to bed? Walk me through a day in the
Sure,
life
man.
of John.
Sure. So I have a beautiful wife, Danielle, and two kids. 5.5-year-old Wyatt's my son, and my little girl Willa is 13 months old, about to be 14 months. What does my day
Nice.
look like? I get up about 3:34 a.m.
You are
Um,
crazy. Oh my
yeah,
goodness.
I yeah, yeah, it's the only quiet time in the world that I get before the world
Yeah.
can kind of break my silence, right? I try to work out and have not been very good at doing that. I'm probably putting work a little bit too much these days. But work out, do some work. I try not to look at emails. I try to do project stuff. So things that are, you know, I don't know, underwriting a deal or something that just is something that I can just kind of hold. I need an hour or two of just dedicated focus to. My kids get up about 6 a.m., then it's all them. It's all them for until 7:30. I take my son to school every day, get to the office, at the office until about 4:30. I pick my son up, and afternoon and evening is family time. And then when they go to bed, I usually watch Netflix, and you can hear everybody say, don't waste your time watching Netflix. Well, you know what? I work a crap ton of time, and I just want some time to do nothing but think about watching something funny on TV. So
I
I don't
love
care what
it.
all the
I
gurus
love it.
say about not watching Netflix or things like that. I read books in between there and stuff. I think it's vital to learn. I think every time I stop reading or I stop doing enough, I realize too late, and you can tell. The one thing I try to do is I try to read books pertinent to something that a project that I am working on, right? So that I can read something and then I'm actually going and using it like in my day to day. I feel that I absorb a lot more, and it kind of sticks with me a lot longer doing it that way instead of just reading random real estate books and not kind of practicing anything.
Yeah. And one day I'm sure you're going to write your own book about assisted living, and you'll teach all those working in the
I
game,
survived.
all the techniques and strategies not to do, right?
Yeah.
No, that's the whole point. That's awesome. That's awesome. Well, congratulations on all your success. I really
Thank
appreciate you
you.
being on the podcast. Where can people learn more about you if they want to get in touch?
LinkedIn. LinkedIn, please. It's where I post 6 days a week. I try to share stories of my engineering journey, things I've learned from the big corporate Apple. And I try to always, put a spin on how those things that you might see from a big corporate company or something else like that, how should you look at it and how should you use some of their thoughts for your own business? Um, and I have a newsletter that you can find on LinkedIn. I don't write about daily Fed rates and things like that. I try to speak about personal things journeys that I've gone through, losing a father early on and how that shaped my life, my kids, and how I try to be, good for them and what I try to teach them, and wealth and trusts and life insurance, and just I try to keep it as real as I possibly can, and stuff that I hope people can gain from and get ahead of the game that it took me too long to learn, and I wish I had started sooner in my life. All that good
Nice.
stuff.
Yeah. No, awesome. Well, thank you again, John. I really appreciate all your time, wealth of information. For all the listeners out there, be sure to like and subscribe our podcasts. We're on Apple, Spotify, to keep this thing going. So really appreciate all the listeners. And John, thank you again. I'm sure we'll be in touch. So have a great day.
Yeah, awesome. Thanks, man.
Thank you for watching Sky's the Limit. We're always releasing new real estate content, so if there's something you want to hear, be sure to leave a comment. And don't forget to subscribe to our channel.